Now, as Nigeria prepares to implement the Nigeria Tax Act 2025 to boost revenue generation, attention is shifting beyond taxation to the management of public funds. Amid growing advocacy around the new tax law, stakeholders are raising concerns that fiscal discipline and accountability are receiving far less attention. They are questioning how increased revenue from the new tax regime will be managed and whether the Fiscal Responsibility Act of 2007 is still being effectively enforced. Trust TV's Nuel Samson has more.
One of the Revenue Mobilization Allocation and Fiscal Commission, Dr. Muhammad Shehu, says the Nigeria Tax Act 2025 represents a significant step towards fiscal efficiency, revenue growth, and economic stability. Speaking to journalists in Abuja, he explained that the act, which takes effect in January 2026, harmonizes Nigerians' tax laws, reduces compliance burdens, and supports ease of doing business. Dr. Shehu highlighted improving economic indicators, rising inflows into the federal account driven by fiscal reforms, and a gradual reduction in reliance on oil revenues. He reaffirmed the Commission's commitment to transparency, accountability, and collaboration with stakeholders to strengthen Nigeria's revenue system and ensure long-term fiscal sustainability.
Well, you enhance fiscal efficiency in terms of efficiently collecting the taxes that are supposed to collect, not to have multiplicity of taxation where you are unable to collect those tax systems. Now, with an efficient system, technology, digital e-invoicing, and other things, you are going to concentrate in making the collection efficiently, and then more money will come into the system.
With increasing emphasis on digital collection, automation, and transparency, the bank's policies that advance financial inclusion, reduce cash dominance, and expand secure electronic payment channels help enlarge the tax net and improve the integrity of revenue remittances.
Despite government assurance, concerns persist over the new tax reforms scheduled to begin in January 2026. Many Nigerians fear rising living costs, widespread information, and uncertainty over implementation. Rumors about fuel taxes, bank accounts, and tax identification number requirements have further heightened anxiety. Businesses and investors are also worried about possible compliance costs and market impacts. However, authorities insist that most low-income earners will not face increased tax burdens and that clearer implementation guidelines will address public concerns. The chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Professor Taiwo Idili, addressed these fears by explaining the rationale behind the reforms, outlining key changes and clarifying partnership between the Federal Inland Revenue Service and France.
The major objectives of the reforms are fairness, to promote fairness, to drive harmonization and efficiency, ease of doing business, enhance transparency for how we use tax monies, and overall to promote economic development.
As Nigeria moves into a new tax era, stakeholders insist that without strict enforcement of the Fiscal Responsibility Act, increased revenue alone will not translate into improved governance or economic stability. Nuel, Samson, Trust TV News, Abuja.